Please note, on Monday, October 11th, 2021, the bond market will be closed, stock options and future markets will be open. Overview, company today, W&T Offshore Inc. Easy to borrow. This is borrowing status. Sector, energy. Industry, oil and gas operations. It's a size mid-cap. Exchange, NYSE. Market cap, 620 million. Has a low beta. Earnings, the next earning date is November 3rd, 2021. With WTI, they're currently hovering around the 4.5 mark. When we took a look at their graph dating back for all time, you can see on June 1st, 2008, they were at $58.51. They dropped over time as they came through some lows. You can kind of definitely see where we came through 2017 to 2021. They came down, but now they're starting to peak back up. I would say with them, you're looking at a double up for next year to see them try to come to $9-10 in 2022 and maybe hit that $15 mark in 2023. When we looked at them April to April and then October to October, looking back March 13th, 2020, we look at their valley and where they kind of dipped at their lowest peak, and they're at $1.42. As they came across from $1.42, they shot back up where I would say their new low level mark would be around that $3.45, with a trajectory of fluctuating to $6. If we look at them, they could definitely surpass that 6, and that's going into 2022. If we look at July 1st, 2021, their high point was $5.07. They've dropped back down. Now they're on a trajectory back upward. On 5/5/21, we can see where they were. And when we come across, I would think right now that they're sitting in a position that $4.56 is kind of their new bar, where then they'll level up to 6, maybe come back down towards the $4.50 to $5. With this stock, I wouldn't see the stock going too far below the 418. They have a pretty good trending on daily average where they stay up compared to other stocks in their market. Looking at that July 1st mark of 2021, that's after the Russell Index reports, the Russell 3000. I would think that they're going to trend and do the same pattern that they did last time. So as they went over in October to October, and we looked at a 2-year graph and how they're leveling back up, they're staying consistent and leveling up each year and almost doubling, which leads me to believe that the $4.56 can turn into $9 to $10 in the future in 2022. As we go through 2021, I would think that they could probably finish the year around $6. They're probably going to go up, but I would say that when they go up, their next bar, if they go up and drop down, they might drop down to $4.50. By the end of the year, you can see them going up where their next lowest valley towards the end of 2021 might be $5.12. Right now, I would consider the $4.50 mark around the sweet spot as their next low. So if you were to buy in now, you're still able to make a profit going into 2022. If you bought in previous, you're probably seeing some good gains on this stock. If you're able to buy in now, and then if the stock drops, buy in again and leverage your position downward. W&T Offshore Inc. is an independent oil and natural gas producer, exploring, developing, and acquiring oil and natural gas in the Gulf of Mexico. When we looked at their range, it was $1.35 to $5.14. Right now, we're above the middle ground of that, which is good to see for them. They have a market cap of $649 million. Next earning date, November 2nd to November 8th. So with them having a earning date approaching pretty soon, this may be the time to buy in. November 14th is their extended dividend date. When I looked at another place, I could see where their year-to-date was 107. They're definitely at where they're at the performance mark for a year. So they could have some fluctuation back up and maybe be sitting at 125%, 130% towards the end of the year for a year to date. Their last dividend pay date was December 3rd, 2014, which is something to take in mind with the extended dividend date going out November 14th, 2014 on here. Their earnings, so right now, they're not paying out a dividend. So it's something to consider with this company that they're backtracking and they're gaining ground back forward again. Then in the future, if they continue their upward climb, possibly maybe you could see dividends coming back out of the stock in the future. The company has interest in approximately 837,500 gross acres, including approximately 605,000 gross acres on the Gulf of Mexico shelf and approximately 232,500 gross acres in the deep water. Its producing fields are located in federal and state waters in the Gulf of Mexico, and water depths ranging from less than 10 feet up to 7,300 feet. When we looked at their graph over the last year, you can see that they're definitely in a trending upward fashion. It's something that we like to see. They do have some volatility in their graph, but that's what makes them interesting. If you catch them at a valley, you can almost double up at the peak. Then they'll go back down to a valley, and if you ride it out, you can get out at a peak, come back in at a valley again. So this is a stock that's interesting to watch. When we look at their earnings forecast, they beat the Q3 2020, Q4 2020, and Q1 2021. They missed their Q2 2021, and they have a Q3 2021 coming up. I would expect them to beat that one and be on the move with where their price sits on their range, that they've kind of gained ground and caught back up. When we look at revenue earnings for quarterlies annually, and we go back to 2017, 2018, 2019, 2020, I would think that for 2021, it'll be close to matching or being in between the 2019 and 2018 revenue. If that happens, it puts them back into that perspective to continue to level up. Stocks to watch that are similar in this category and sector are WLL, Whiting Petroleum Corporation. They're at 63.23. Another stock to watch is SM Energy Company, SM 31.91. CRK, Comstock Resource Inc. They're at 10.59. CPE, Cowan Petroleum Company, at $60.56. OAS, Oasis Petroleum Inc. They're at $105.30. So that's in that competing market. Always evaluating considerable technical and fundamental factors when evaluating a stock. Brings me to SDPI, Superior Drilling Products. This is for their 3-month in 2022. I think that they could definitely hit that $2 mark. right now in 2021. They're close to being at that $1.50 mark, but you've seen them fluctuate in the last couple weeks where they have that potential to go above that $2 and hold. Right now, I'd say around the $1.40 mark is their new benchmark low. I wouldn't see them dropping under $1. With Superior Drilling, I put this graph up to kind of show that in March 19, 2020, they were at 30 cents. They've risen up to surpass the $1 mark. They had some volatility and fluctuation in their graph. When you go and you measure their peaks coming up, they're heading towards where they should be. When you look at the lows, I would say that they're definitely going to stay above $1 at where they're at now. They're fluctuating up where $1 to $1.40 is in a bad buy-in place, with the potential that they're definitely going to head towards $2. If you buy in even up to $1.91, they drop down to $1.50. Buy in again, leverage your position down, you'll be saying okay. So if they happen to drop, buy the lows, leverage down, and then you'll get the most out of your performance on the way up. So for a low for 2022, I would put them above $2. Market cap, 36.84 million. Public float, 11.68 million. Their weak range, 40 cents to $2.38. And that's where I would take in that red box for the low of 2022. I would put that $2.38 as a target. Q2 2021, they beat. Q1 2021, they beat. When you look at their earnings, their next reported earnings is expected on 11/11. When you look at their Q3, I would think that their Q3 is going to match or slightly go above their Q2 report, especially with the oil going up. And I think it rose per barrel like another 2% today, which urged me to do this. So for everything for drilling needs, for oil and natural gas, the drilling industry, its drilling solutions include the patented drill and ream, well bore conditioning tool, the Strider oscillation system technology, completion tools, V-stream, DR stringer, and PDC bit repair. It's a one-stop shop, sales and rental. So SDPI, keep them on your map. I'm only responsible for what I say, not for what you understand. I'm a blue-collar worker. I'm not a financial advisor, not a stockbroker. I'm just here to pay it forward, put out some information about some stocks. Do your due diligence. Make sure you do your research. Keep a positive mindset, your knowledge and your self-investment. The peak is now, 2021 to 2030, 2031 to 2040. If we keep burning fossil fuels at our current rate, it is generally estimated that our fossil fuels will be depleted by 2060. I don't think we'll ever completely run out. It's just we're going to find alternative resources. And that's where 2041 to 2050, you'll see a drop in oil price. 2051 to 2060, you'll see another drop. And that'll be because of the alternative fuels that are being developed now between 2021 and 2030. But to develop those alternative fuels, we also have to burn oil and gas. So we're going to be using fossil fuels in the next 20 years, which puts them in demand for now. I hope you like this video. If you like it, share, subscribe, like. If you need me to talk about any videos, or if you'd like me to research something, just put it in the comments and I'll check it out.